G'day folks, Jim here from FX Charts, Thursday the 27th of March. Thanks for tuning in. Well, the dollars have been pretty mixed today. We had the US durable goods out. They came out better than expected. That kind of helped to underpin the dollar, but then there was a 5-year US Treasury note auction which saw good demand and pushed yields lower. So that took a bit of the steam out of the dollar, really. It's ended up going really nowhere against the euro. It's still trading close to 138, and also dollar Swiss. Sterling's a little bit higher after some comments from some more hawkish comments from one of the BOE Monetary Policy Committee members. But the real mover of the day has been the Aussie and the Kiwi, following Glenn Johnson's quite upbeat talk yesterday in Hong Kong. So we'll go and have a look at the charts. And I'll go through the majors pretty quickly because there's not really an awful lot happening there, and go and have a look at the Aussie. But the euro at the moment, it's holding this 137.70 uptrend support. There's been good bids down here at 137.5, bounced off there each time we've seen it. If we do go lower, maybe 137.20 on the day. I don't think we're going down towards 137 yet. There's some support at 137.20. Ichimoku support on the top side above 138. Well, we might head back to 138.5, but I don't really see it. This spike top here is 138.75 the other day. So really the euro's not looking very attractive either way at the moment. And ahead of we have got the US GDP out today, so that could move it around a bit, but it'll be the German CPI that the market looks towards, with the market a little bit concerned that the recent talk by the various ECB board members about the potential for negative interest rates in Europe could come to fruition, and that would push the euro a bit lower. Moving along to dollar yen. Well, that's doing precious. Well, when I say it's doing precious little, it actually did get down below 102 briefly today. This was after the US the Treasury auction, but it's come back here and it's regained 102. Today there's not an awful lot out, but tomorrow we've got there's a lot of data out tomorrow. It's also the Japanese financial year end, and we've got the tax hikes coming in April, so we might see some action there. Right now the 4-hour charts are looking pretty flat. They're pointing potentially a little bit lower, but I think 101.80, 101.75 will probably cover it. Down around here, this is around to 101.60, this rising trend support, and I doubt we're going below there. On the top side, we haven't been able to crack 102.5 recently, so I think that's probably well toppish on the day. If wrong, we might get up to 102.70, but I can't see it. Sterling, as I said, that made some reasonable gains today on the back of some hawkish comments by the Bank of England, but it's sitting up against resistance here at to around this 165.80-90 level. Now the 4-hour chart, 1-hour charts here, they're looking a little bit overbought, and I think if the euro does look to head a little bit lower, some of the steam might come out of sterling, and we could see it back down here around here 165.5, the 200-hour moving average. Below there we've got 165.10 is the 100-hour moving average. Going further out, it looks as though we have got a bit of a rounding bottom, but and the 4-hour charts are slightly positive. But I don't really think we're going anywhere too far. The dailies are pretty flat, so all up I think 165, 166, possibly a little bit higher. That looks like to cover it for the time being. Dollar Swiss, I won't spend too long on that. It hasn't done anything very much. It's finding a struggle at 870. Equally, it's finding decent support down around 88, the figure. I think the dailies are pointing a little bit higher. So eventually I think we might take a look at 89, but there's decent resistance up here. The 89.60, well, that's where the 100-day moving average is. That's quite a long way off. But in the meantime, so 89 the figure, and 89.50 should provide reasonable support. On the downside, if we go back below 88, then 87.75 and 87.50 should cover it. Now the real action is in the Aussie, and as we can see, the reverse head and shoulders appears to be coming to fruition. Now, the measured target from the low to the neckline brings us up actually to around 85.90. Now, that's going to be some way off, and the market's on this trade. And the only thing that worries me is if we do see a lapse back below the 200-day moving average, which is this purple line here, which is also where the neckline is. Now, if we go back below 91.50, the fallout could be rather steep, and we'd end up back at 90 the figure quite quickly, I think. But for the meantime, we're looking at a move. Today's high was 92.45, or yesterday's high was 92.45, I think. Beyond there, there's minor resistance up here. This is at 92.70, where the 100-day moving average supported this low here. Beyond there, there's not an awful lot until this 61.8% FIBO retracement of this move down from 97.57 to the low. That's at 93.39, 93.40, something like that. So I think that's the next target. In the meantime, though, today I doubt we're going anywhere too much higher. The 4-hour charts are slightly overbought and look as though they could be turning a little bit lower. The 1-hour charts, likewise, they're looking as though they might come off a little bit. So we might see a move back down. Let me just draw this in. We might see a move back down towards the 91.90 area where this first FIBO is. I think down there it'll probably be a buy. I wouldn't really want to see it go much under the 38.2 level here, where the rising trend support comes. As I say, that's at 91.50, which is where the what have we got? The 200-day and the 200-day moving average and the neckline are. So below there, I'd be out of my any long positions. But until then, I think any near-term dips are probably a buy. Probably with a stop and reverse there below 91.50. That's right. And we're going to have a look at the Aussie crosses in a second. But first of all, I'll just deal with the Kiwi, which for the time being is holding this rising trend support. That's currently now at about 85.60. We're currently at 85.90. We've just had the trade balance come out. That took it above 86. The trade balance was a bit better than expected. Now, if we can eventually take this out, and I don't think we're going to today, then this high up here at around 86.40 comes into play. The 4-hour indicators actually look as though they're running out of steam a little bit, and the dailies are not that confident in my view of heading higher. But if I'm wrong there, we can go back and test this high here. This is back in October, November. It's 86 3/4, and above there there's 88.42, but that goes back to 2010, 2011, sometime like that. So those are the points on the top side, but there's a lot of work to do before then. In the meantime, today, I think so 86.10 to 85.70 should cover it. I'd be a little bit wary of a break on the downside, which could take us back down here towards this sort of 85 the figure, but at the moment it's not looking like that. Now, if we move along to the Aussie crosses, leading the way higher for the Oz, lower for the crosses is Sterling Aussie. Now that it's a bit messy, this chart, but it broke its neckline here at around 182, as we were saying the other day. We've got the 100-day moving average sitting here, the blue line, that's at about 180, 180. Now we're well below that now. We're below 180 the figure. We're holding on at the moment to the 50% pivot for the run-up from here, from about 165.60. Now that comes in right here, just around 179.10.15. If we take that out, and I think we eventually will, we're heading down here towards this sort of 176.20 area. Now the measured target is down at around 172 from the top to the headline to the neckline is down around 172. So eventually this all 76.4% FIBO target could come into play. Before then, though, we've got good support down here at the 200-day moving average, which is about 175.5. Now the other charts look pretty similar, really. The interesting thing is the Euro Aussie, that's yet to play catch up. It hasn't broken its neckline at this stage by the looks of things. So we're currently sitting right here at 149.5. The 200-day moving average down here at 147.85. Now the dailies are looking negative, as are the weeklies. They're not looking real flash either. The 4 hourlies look as though they are oversold, and we could get a bit of a squeeze. Now, if we did see one, I think then we're probably if we could see a squeeze, maybe up to 150.5, possibly even 151. I think it'd be a great sell opportunity, because I do think we're headed lower, and the measured target would take us probably down to somewhere around the 50% FIBO pivot of this move, which is at just above 140. So that's worth looking at. Now, as I say, this hasn't broken its neckline yet, but if we go and look at Aussie Swiss, that most definitely has, and it's broken above here and looks as though it could be heading towards the 200-day moving average at 83.15. Before then, though, we've got the 50% pivot of the move down from, where was it, 87.5 so to 77.20. 50% pivot comes in at 82.40 or so. So that'll provide resistance. Once again, though, the short-term charts, they are looking slightly overbought as far as Aussie Swiss is concerned, and it could be that the 4-hour indicators are showing signs of topping out. So we could get a bit of a retracement back down here towards this sort of 81 figure 10 area. Below there, we might see a run down towards sort of 80.80, or this rising trend support, which on the hourlies, that comes in, ties in roughly with about the 100-day moving average, 38.2% retrace of the move up. So that comes in about 80.50, 80.60, somewhere around there. Now, if we got a dip down to there, I think it'll still be a buy. The dailies still look pretty positive, and as I say, the weeklies they're looking okay as well. So I think we are eventually headed to the top side. Eventually, I'd like to think we might even look at this top up here about 87.5, but that's quite a way away at this point in time, and I wouldn't get too excited. Finally, Aussie yen. Now, Aussie yen, that's been up to 94.70 today. It's come back off a little bit now. It's down around 94 figure 10 again. So maybe we've seen a high there for the day. The 4-hour indicators are looking a little bit heavy, but on the dailies, they do appear to be running to the top side. But every time over the last 12 months or so that the Aussie yen has moved up here, it's topped out. Now, if we can keep going, it looks like we've just about met this previous top here, the November 13 high. If we can break that, then I suppose we can go to the October high up at about 95.60. But as I say, every time we do get up here, it has come back into the range, and the weeklies aren't really showing any great sign of wanting to go anywhere. So I'm not getting too excited about Aussie yen. And maybe that's a hint for dollar yen as well. If the Aussie does continue high, as it looks like it's going to do against the other crosses, but Aussie yen goes nowhere, that's a cue for a lower dollar yen. But that remains to be seen over time. So anyway, that's about it for today. We've got the US GDP coming up. As I say, we've got the UK retail sales. Not a lot for the Aussie or the Kiwi today. We just had the Kiwi trade balance, but not a lot for the Aussie. And it could be a fairly range-bound session. I don't think the Aussies... I think it probably could do with a bit of a rest today. As I say, under 91.50, I'd be a little bit wary of being long, but until then, I think dips probably a buy opportunity. So that's about it. Have a very good one, and we'll talk to you tomorrow. Cheers.